Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Ginnie Carlier. She's the America's Vice Chair of Talent at EY. During her tenure at EY, she has built high-performing teams in 3 continents. It is great to have you with us, Ginnie. Welcome to Trade Talks.
Thank you.
All right, having built teams across multiple continents, what's on top of mind in 2023 from a talent perspective?
Well, it's interesting because with all the economic uncertainty, we're seeing almost every day companies having to make really tough decisions, but also, because they need to ultimately protect the bottom line and shareholder and stakeholder value. But we can't lose sight of the importance of having a really people-first, talent-first mindset. And one of the things that we saw shift during the pandemic was really the rise of the profile of the CHRO being at the table, really helping make strategic decisions around talent and impacts to the business. And I think what's really important is that the CHRO maintain that seat at the table, because as these organizations navigate these tough decisions, they're going to be focusing on jobs, benefits, and how to continue to maximize hybrid working or flexibility in the workforce, and the CHRO really needs to be at the table for those.
Why should layoffs be the last resort?
Well, what's interesting about the talent market right now is that there's headlines every week of job cuts, but then on the flip side, you're hearing about 1.5 times plus the number of open roles for every job seeker. So this contradiction is really kind of creating sort of a tension in the workforce, and what does that mean? And so I always talk to organizations or to our leadership team about 3 things that we've got to consider when we're making these tough decisions around jobs and hiring is looking at the cost of rehire when things rebound. That is a cost that's going to continue to rise. It's not just about onboarding and training, it's also about compensation and benefits that you're going to need to implement to attract that talent. It's also looking at the fact that the labor market's actually shrinking in 2 key segments. The Gen Z, if you look at entry level, and Gen X, which is kind of our managerial leadership, those segments are shrinking. And then lastly, there's a big skills gap out there, and it's continuing to grow. And so one of the things that I've always challenged is, should we look at soft parts of the of the business, and how can we maybe take talent from there and think about upskilling them in other parts of the business where we see growth potential? And so I guess what I'm saying is sometimes we do have to make that tough decision, but there's a lot of other factors that really need to be considered in the long-term ramifications before you get to that point.
Well, it's interesting. During the pandemic, organizations made a really strong push in terms of supporting their people, right? So is it sustainable to keep up the progress that's been made on the people side?
I think it's an imperative. I think one of the things that we realized quite significantly during the pandemic is during times of uncertainty, and then you think about it, right out the pandemic, we had an amazing time of growth. And that was still, in some ways, uncertainty. And so our people look to their organization for support. And organizations are going to have to continue to invest in their people. And cutting on benefits, it's a quick fix, absolutely. But I think by doing that, if you have a true differentiator in the benefits that you offer your people, you're going to lose that in your future endeavors to attract and retain top talent.
Right. And speaking of benefits, why does work from home? Why is that a priority?
This is a real debate right now. And there's a lot of people who believe that we lost productivity during the pandemic when all of us were working remote, and that to gain that back and to ultimately hit the bottom line in a positive way is to bring everyone back full time. But it was interesting, we recently did a generational survey. We looked at all the generations in the workforce, from Gen Z to baby boomers, and every generation said that having flexibility in how and where they work had a significant impact on their decisions to stay with an employer or to change to a new employer. And so I think what the dialogue that we really need to be having is, how do you use flexibility to your advantage, and how do you establish flexibility norms that meet the needs of our people, the people in your organization, as well as the customers, and continue to fulfill that connectiveness that's required to have high-performing teams.
Why is it important for organizations to keep an eye on culture? Because with this hybrid environment, you want to make sure that it's consistent internally in how it's being represented externally. Brand is everything.
Yes. What's really interesting, Jill, what we started to see even before the pandemic was this this evolution of culture. It was no longer a statement of what an organization wanted to be known for, or a narrative on a website. It became more tangible, if you will, around how do employees feel, both personally and professionally, working for that organization, being associated with that organization. And that, again, going back to this generational survey that we looked at, 92% of the respondents said that culture of an organization will have an impact on their decision whether or not they leave. And what's also interesting is we're starting to see this correlation, strong correlation between culture and the value proposition that we offer employees. You can no longer look at a person in one dimension, an employee or a professional with your organization. You need to look at them from both a personal and professional side, and really move from that kind of transactional to that transformational, and move away from what we used to call the employee value proposition, but really looking at the human value proposition.
So how do you keep an eye on your people? What are you doing for the team?
So, our biggest way that we have found that we can support our people is really around holistic well-being. So not just doubling down on physical or emotional well-being, but looking at a person and their families with the way they describe families. Everyone describes family differently. But we recognize that what's happening outside the workplace has a real impact on an employee and how they show up. So we started looking at our well-being benefits and making sure that those benefits not only helped our employees and our professionals, but also helped their households. For example, we used to have free sessions for mental health counseling for our people. But our people were saying, well, not every one of us need mental health counseling. Some of us just want coaching in different aspects of our life. So we took it seriously and we offered it to our employees. We increased that benefit, but we also offer it now to members of their household.
Right.
So
yes, I have noticed an uptick in our benefits here at Nasdaq throughout the pandemic. So that's awesome what our people team is doing. So basically, at the end of the day, talent regularly needs to be at the top of the list.
Yeah. Yes. What my advice is, and what I continue to say, is CHROs need to be bold. They need to continue to be at the table, make sure they have a seat there, because the business agenda and the talent agenda are so interdependent now. And if one fails, the other will fail. So it's important that the CHRO is at the table, is talking about the implications that decisions can have on talent, but vice versa. Decisions we're making around talent. Going back to the skills gap, right? The CHRO bringing those ideas, those bold ideas about how we can upskill talent for the future.
Right. All right, Ginny, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.